Hello, greetings. Welcome to Dividend Blasters. This is our 101st video, and our topic today is Invest Like a Legend, Bill Ackman. And while you're doing it, get a quality monthly distribution with Acky. Acky is a new covered call ETF just launched today by VistaShares. VistaShares, I would say, is a fairly innovative asset management firm, an investment firm. And they're doing some really interesting things over there. So let's press on. First, what is the objective? Let's talk a little bit about this exciting new Target 15 covered call ETF from VistaShares. Target 15 is a family of ETFs with option overlays managed by VistaShares. There are now three of them. And I'll talk a little bit more about those, but basically, they are replicating very prominent investment managers um, with the same holdings, but they're offering a distribution through a covered call strategy or an option overlay strategy. We're going to get into that. First, a little disclaimer: what I tell you is not financial advice. This video is for information and education. It reflects my own personal opinions, research, and experience as an independent investor for more than 30 years. So do your own research, your own due diligence, and consult a financial advisor prior to making any major financial investment decisions. So who is Bill Ackman? Bill Ackman is the CEO of Pershing Square Capital Management. Pershing Square Capital Management is a big investment firm. They're a hedge fund headquartered in New York City. They are privately held. They have about $21 billion almost in assets under management. Bill Ackman has a personal net worth of almost $9.5 billion. Bill Ackman is not an old man. He is not even 60 years old, but he is a world renowned investor. He's as close to Warren Buffett as you can get. He's really quite amazing. Anyway, let's keep pressing on. So, if you want to get a little bit of insight into Pershing Square Capital Management and what they do, you need to perhaps take a look at one of the subsidiaries that account for about 18.5 billion of their assets under management, and it's Pershing Square Holdings, uh, which is actively traded not on the New York Stock Exchange or Nasdaq, but on the London Stock Exchange. Here, it's traded over the counter, and as I mentioned, they account for about $18.5 billion of the assets under management. Very well known, very well respected company. Um, and I'm going to talk to you a little bit about how they've been doing. If you wanted to compare them to the S&P 500, take a look at how they do year to date. Um, Basically, almost three times the total return of the S&P 500. So year to date, a little more than 27%. S&P 500 is about 10.75%. If you want to stretch that out about 3 years, about 90% total return. Pershing Square Holdings, S&P 500, about 60%. So that's all I'm going to, I'm not going to get too much into them because I want to talk a little bit more about Bill Ackman and what his philosophy is. And I'm going to talk a little bit about Acky. Let's talk a little bit more about Bill Ackman. Bill Ackman is known as an activist investor. And sometimes when we hear the term activist, oh, wow, he's a political activist. He's looking to overthrow. No, that's not it. He's really more of a business activist. And his mission, I would describe as someone who targets underperforming companies, uh, buys significant shares or stake in the company to gain some measure of control and to influence behavior, to unlock shareholder value. That's really what he's about. And if you think about that, if you are an investor in any of these companies that he does this, he's actually doing you a public service. It's really quite amazing, and I admire the guy. I really do. And he does it by you know buying shares, maybe getting an ownership or some kind of plurality uh, ownership, if it's not majority ownership in the company, securing board seats, advocating for change and compelling change to improve performance, and it's really at all a benefit to the shareholders. And he's done this a number of times. And it's not for him. It's not about gaining control of a company and taking it over. It's more about getting a company to perform better and drive increased shareholder value, which I think is fantastic. He's done this a few times with a few companies: MBIA, Target, J.C. Penney, Canadian Pacific Railway, Herbalife, and this is just a handful of them. So something to think about. So let's talk about Acky, the new covered call ETF by VistaShares. And as I mentioned, uh, you know, these guys are going to replicate the holdings of Pershing Square. Now they aren't affiliated with them, but they're replicating the holdings, and through an option overlay strategy, they're going to deliver a monthly distribution. And they're doing this on two other covered call ETFs, and they're doing it successfully. And just full disclosure, I own both of them, and I'm very pleased with those investments. The other two are OMA, which is the VistaShares Target 15 Berkshire Select Income ETF. It replicates Berkshire Hathaway, Warren Buffett's company. And then there's another one, QUSA, VistaShares Target 15 USA Quality Income ETF. These basically are investing in quality US based companies that are very safe and have very predictable uh, dividends and not a lot of volatility. And so they're delivering, predictable distributions monthly through QUSA. Acky is the new one. The other two, these are not covered call ETFs. These are ETFs that have more of a growth focus. I've actually done a video on Wild that is really more about momentum investing and investing in really the top five publicly traded companies by trading volume and rotating them monthly by volume. And that to me has done a very good job. And then there is a super cycle growth ETF around artificial intelligence or AIS. And I'm very pleased with that. It's really a pure play on general artificial intelligence holdings. But anyway, let's talk a little bit more about the Target 15 option income ETF. So basically, I mentioned quality, value, low volatility, a little bit of momentum, targeting famous managers. I mentioned Warren Buffett, mentioning Bill Ackman. And really, the nice thing about is, in addition to the replication of the top holdings of Berkshire Hathaway or Pershing Square, they are delivering through an option overlay strategy a monthly distribution with a target of 15% annually. And it's approximating 1.25% monthly. Now, is it going to be 1.25% exactly every month? No. I mean, some months it may be a little bit more, some months it may be a little bit less. They're going to do what makes sense. And I like that because it's really all about stability and predictability. And if you listen to my videos, you know I'm all about stability with a covered call ETF. I want a stable net asset value or NAV. And I don't see any evidence that of the other two covered call ETFs that they manage that there is any indication of NAV erosion or decay. Very stable. They're doing this by selling strategically out of the money calls. And I think that is smart. And that's what I do when I sell covered call options on stock. And I look for covered call ETFs that do just that. So Acky, as I mentioned, launched today. It opened at a little over $19.90 a share. And it closed at $20.17. So not bad at all. Ticker symbol ACKY. So here's a little bit more information, and it's not yet available on Seeking Alpha, but no surprise, the net asset value is around $20. There's a monthly distribution. The expense ratio, very much like the other two covered call ETFs, is 95 basis points. Now, with covered call ETFs, these tend to be a little bit pricier, but remember, when you have this option overlay strategy, you're going to get a little bit of extra in your return. You need to pay for that. And these guys are working hard because they're selling covered call options. 36 holdings altogether. I'm going to share with you in just a bit what the top 10 are. But before I do, let's just read what their description is. And this comes right from VistaShares website. Provide core equity exposure through a systematic selection process that mirrors Pershing Square Capital's publicly disclosed holdings while seeking to generate high monthly income through an options-based investment strategy. And as I mentioned, targeting 15% annual income distributed monthly. They're not affiliated with Pershing Square Capital or Bill Ackman, but they're replicating his strategy. And you know what? If you're going to replicate somebody, replicate the very best. These are their top 10 holdings here, but actually, let's go to the next page. I've blown it out a little bit. It's a little easier to read. The top 10 Uber Holdings, 20%, Brookfield Corporation, 18.33%, Restaurant Brands International, Howard Hughes Holdings, Amazon. You can't get much better than these. Alphabet Class C, Chipotle, Alphabet Class A, both of the Googles, Hilton, and Hertz. Those are the top 10. I tell you, I like what I see. The management team, um, I know these. I know their names. These guys are very well respected in the industry. Adam Patty is the CEO. He's been in the investment industry for, I want to say, 3 decades. He's been around. Has had a very successful career. John McNeil. He's been in business for a long time. He's a former president of Tesla, so he's been around as well. These guys are very respectable investment professionals. I feel very comfortable with them. And let's just talk a little bit about OMA and QUSA and how they've been doing, just to give you a little background. Like Acky, as I mentioned, they have the same expense ratio. OMA has done very well. If you look at their assets under management, it's almost $500 million. QUSA is a little bit smaller. It's about 18 million almost. And what I like is, and I think that this is really important, if you look at the dividend yield trending 12 months and based on when these two funds started, and they both started this year, they're both on track to meet that 15% annual target. And you can see what the dollarized amount is per month, trending 12 months actually, annually, $1.45 and $1.01 for each of those, and both distribute monthly. They're both in their first year, but so far they're doing a pretty decent job. I'm not going to read all this, but you can read this. But QUSA basically is investing in quality companies, and you can see the top 10: Oracle, General Dynamics, Fastenal, Illinois Toolworks, Mastercard, Visa. These are all very, very respected dividend payers. Procter and Gamble, Costco, and ADP. I own shares in every single one of these, I think, except General Dynamics and Fastenal. And you know what I like about this? These guys are very transparent, and I'm going to expect to see this with Acky. But here they're very transparent about publishing their NAV, and you can see that the NAV performance is actually outpacing the price performance since inception. So, and they calculate the NAV daily, as they should, as a lot of covered call ETFs are required to do. And you can see what it is for the 1 month, the 3 month, the year-to-date time frame. And they are just very transparent, and they're doing a very good job. And when I see a positive NAV, that's telling me that these guys are responsible. They are pulling in enough premiums to cover the distributions. They're not over-distributing. And so there's no draining of the underlying assets in the fund. So it basically saying there's really not that significant of a risk of NAV erosion. This is very responsible. That's QUSA. Here is OMA. Same thing. Very transparent with the NAV performance. And I like the top 10 holdings. These are replicating Berkshire Hathaway's top 10. Obviously, the first one, they invest directly in Berkshire Hathaway. And then they followed Berkshire Hathaway's holdings: Apple, American Express, Bank of America, VeriSign, Chubb Insurance, Coca-Cola, Visa, Chevron, and Oxy Petroleum. And folks, that is it. I hope you found this to be informative and useful. I thank you for sticking with me. If you would consider giving us a like, subscribing to the channel, and sharing the video with a friend, and hit that notification bell so you're notified of our next video. And before we close, just a reminder, as an affiliate partner of Seeking Alpha, I can offer you a discount on the premium subscription, the Alpha Pick subscription, as well as the bundle. For premium, you're going to get a 7-day free trial and you'll get $30 off. Alpha Picks, you'll get $50 off. Bundle, you'll get $159 off. You can see the link. You can also see the QR code. It'll take you right to the offer. You can join. And I got to tell you, I'm a longtime subscriber to both Premium and Alpha Picks, and I absolutely love that insightful analysis and up-to-date quotes on stocks and ETFs with Premium. I also love getting the 2 stock picks every month from their team on Alpha Picks that are absolutely crushing the S&P 500. And if you want a little of both, get the bundle. If you're interested, check us out on other platforms. We're on X, we're on Instagram, and on Facebook. Check us out, Dividend Blasters. Until our next video, have a wonderful day, and God bless.